investor at extremes, not necessarily intra moves, but at extremes. So just be careful out there. We're in a bear market. We're going to go lower. Buys can be great. I would say for me to turn the corner, and needless to say, it's a slow journey. Meaning, like you're losing a lot, then you lose a little less, then a little less, then you're a neutral trader, and then finally you turn that corner. It probably took me a good 3+ years to get to that. I wish I had educators like yourself or myself back then. I didn't, so it was a lot of trial and error. But it took me years. People have to remember the market will make you pay, or you have to follow someone who knows what they're doing. Following someone is a lot cheaper in the long run. That's right. It takes time. You have to work at it. It's not something that you just do a trade and you're like, oh, instantly I understand. Keeping a trade journal, looking over why you lost on a trade, going over that multiple times. You always learn more from your losers. I'm in the camp that, so we know we have some big stuff coming out, the CPI data, the Federal Reserve, likely 50 basis point rate hike. So when we're talking short term, I have a neutral to positive bias on the market. That comes from this pattern here, which is basically just sideways consolidation off of this up move. So there's a difference between a micro pattern and a macro pattern. Micro reflects very near-term price action versus macro would be the bigger time frame. The micro pattern, the near term, is probably slightly positive here. You would assume that it might coincide with maybe a slight pullback in inflation or something else like that. But once we get that move up, I don't think there's a ton of upside in this market. And again, I'm kind of looking at a chart trend line, maybe something like this. Maybe this is your max upside here. And then we start to roll over. And eventually we take out these recent lows at 380 on the SPY. And I'm still in the camp, and I've said this since the beginning of the year, that I would not be surprised if by the end of this year or early 2023, we retest that pre-COVID high down there. So I still remember in October, I did some live interviews in Dubai, and I was talking about that, and I was at a live Bitcoin conference. So you can imagine everyone wanted to tar and feather me at that point.
Did they throw stuff at you? You were live, huh?
It was kind of more like the blank stare of like, am I really hearing this guy say this, or is this real life, But the bottom line is you had all the makings of a bubble, and we know that Bitcoin is a classic risk on environment asset. So if that was ready to roll over and you had the S&P 500, if we go back to the spiders here, it kept on hammering on this trend line. And what we know from trend lines is the more we hammer on a level, the weaker it becomes. Right. So we knew that. We knew the Fed was essentially going to start to pull back on quantitative easing and start to taper. So it was kind of like everything coming together. And in the S&P chart, what I love showing here is if you looked at the beginning of this move, it was very vertical, hit and then sharp move and then a higher and a higher. And then what you got over here was kind of a more flat top. And let me get my trend tool out there. And this tells you that there was a lot more distribution going on. So it was basically smart money was starting to take it off the table. So it was just that combined with Bitcoin, combined with how many times in a row we were hitting this line, that gave us the probabilities that a break was likely coming. This is just what you expect from gold, right? So let me erase this trend line here, get this out of the way so we clean it up a little bit. But basically you had this longer term breakout here on gold. Yeah. Okay. And then you went to right at double top. So double top is a classic resistance. We pulled back. We did the classic retrace to the scene of the crime play right here, which is you're retracing to home base. And now you've moved up and you're starting to make bullish consolidation. So I'm in the camp that, number one, gold is still positive for the year in spite of the DXY, the dollar, just being absolutely ripping higher, right? I mean, this was where the dollar was at the start of the year. So, I mean, usually the gold will go opposite the dollar. So the fact that you have a strong dollar and you still held up on gold tells you that money flow continues to accumulate. The chart itself on gold continues to tell us that as long as the breakout holds here, this downsloping trend line, and you're making this factor, I gotta believe you're still in this inflationary environment where gold has quite a bit of upside to go. So again, it's kind of the perfect asset. If you compare it to the S&P, if you compare it to Bitcoin, it has been, I mean, you haven't made a fortune on gold, but you haven't lost 20% like the S&P or 50% like Bitcoin. It's just hard to imagine. I mean, right now you have a lot of kind of unease globally, geopolitical stuff going on. We know Russia and Ukraine, that whole situation is still unfolding. So it makes global money want to find the safety of the dollar, and that keeps this bid in the dollar going. But as time progresses, I do believe that we'll start to see that fade. We've already seen the digital yuan starting to take over. There are transactions going on now in that form by more and more countries. And I do think that over time, the dollar will become less and less of a stable reserve currency. And ultimately, that's a huge bullish scenario for the dollar, for the gold chart. I do think that was another nail, and maybe multiple nails in the coffin. I do think that the track we've been on, like the Chinese introduced the digital yuan long before that, and there's no denying that China wants their currency to be the reserve currency. So I would love to see an ETF on it at some point. I know it's controlled by the government a little bit, which also makes it a little problematic, but certainly that would be a cool thing to see in the future. But the bottom line is the dollar has been on this path for a long time. There's, Iran has wanted to do trades outside of the dollar for long periods of time. I mean, so it's been something that's kind of been occurring for a long period. I have picked up some. I am a realist in that, there is a chance that we could go and retest this area down here on the silver chart. But for me, I think when I'm looking to invest, so there's the difference of swing trading versus a longer term trajectory of a year, let's say, out or more. And I think that even if we dip down to 19 from here, you just used it as an accumulation zone. Because again, if you're in the camp that the dollar eventually will decline in value, gold and silver will be a key place where you'll get major runs. And I think you would agree with this, is that if you look at this low from March of 2020 to this high, even, this is all inside bar. It's not pretty. It's not nice.
It's ugly. It's messy. It's corrective.
It is, absolutely. But it is digestion. It is digestion of the big up move here. And so I do think this ultimately leads to another leg higher. And what you could do is you could actually do a measured move where you take this low here and this high. And then when you do get that break, that would give you a target to the upside of that distance. I think you're 100% right, is that everything about how the performance of all assets are going to go, it's all going to be tied to the bond market at this point and what interest rates are doing. Everything comes back to square one, which is interest rates. And I agree 100% that this is going to be the litmus test for the markets. I think for me, this could be a scenario where we get a little bit of short-term upside in the markets over the next week or so, and then you see that reversal around the solstice kind of thing. I think that could be a very good possibility. It does seem like the markets are getting a little bit more complacent again. Even though we haven't had much of a rally, it's just kind of been a quieter market than what we've been experiencing. So for me, what I'm looking to do is I've had some long tech trades on that have been nice. They're in the money. I've taken some off the table, but I'm still having some on, and then I'm going to look to rotate out of those. I also think oil is going to be one of the most amazing downside moves. Number one is when no one can come up with a reason. That's usually why it happens. There's something that pops up. It's when everyone is focusing and saying, oh, well, it's going to be this, or it never is that, right? So I mean, if you do want to look for a reason, you could say something that no one expects, like maybe all of a sudden Russia decides that, hey, we are going to back out, or maybe there's a peace deal. Maybe Putin gets overthrown. I mean, you just don't know. But what I do know is that it's very rare for oil to stay up here going into midterm elections. Historically, there's usually a sharp downside move. In addition, you have to look at what's going on with the price of oil and demand destruction. So, now you're looking at people filling up their gas tanks, and it's costing them $120 to fill up their gas. You might budget $400, $500 for that trip, 1,000 miles. But the question is, are they going to start saying, you know what, I was going to go shopping the next 3 days. Let me combine that into one trip. Let me not go out constantly to grab something from the grocery store. It's the smaller things that start to add up. And then maybe let's not plan that trip for 6 months from now because it's going to cost too much as well. But I agree. People want to get out right now. I don't blame them. I'm the same way. But and if they already planned it and scheduled it and paid for that vacation, they're going to take it. It's about the future vacations at this point, I think. When you have too many bulls on one side of a trade, inevitably that trade will falter. And the more bullish you get, I mean, think about Bitcoin at 65,000. I mean,
Yeah.
you couldn't find anyone but me really that was bearish on Bitcoin up there. And look at what Bitcoin did. And oil is the same way. You have all these mutual funds, these pension funds, these hedge funds. Everyone's piling into these names, and you're getting these ridiculous moves up. And the small investor is getting pushed by talking heads to get into these trades. And again, just to use this as an example, look at ExxonMobil. I mean, people are buying in here on ExxonMobil after just this year. It's up from $60 overall. I mean, it's almost up 100% on the year.
Yeah.
And people are buying into it. But if you look at the technical chart, you got a perfect double top here.
Wow, 2014.
Yeah. So, I mean, to me, that's
when oil was 140.
Right. Yeah. Right. So you have that. In addition, I think there was, let me just go to this again. I want to just take a look at my RSI because I thought I saw a negative divergence on the RSI here. Let me take a peek here. Yeah. So this is something that I pay attention to. And it's important to understand that RSIs don't dictate immediate price action, but it tells you something is coming. Since 2022 or the beginning of the year, you have price going up, but the RSI is making lower highs. And that to me tells me, it doesn't tell me it's going to roll over today or tomorrow, but it certainly tells me that something is in the works here that's going to change the narrative that everyone's talking about of oil just being the best thing and it's going to go to 150 or 200, and it likely will see a reversal back down. So there's lots of signals out there. Double top on Exxon, negative divergence here, overzealous buyers, too many bullish players out there. So I actually am short oil right now. I'll admit it. I am short oil up here, and I'm looking for a pullback. I just always like to caution viewers to, when you hear everyone saying something and everyone's talking about this being the next thing, always think for yourself and take a step back and just remind yourself, if everyone's heard this, like bullish oil or bullish Bitcoin back in November, then who's left to buy if everyone's in that wants to be in at that point? So eventually the sellers take over. And I think that, you want to kind of be somewhat of a contrarian investor at extremes, not necessarily intra moves, but at extremes. So just be careful out there. We're in a bear market. We're going to go lower. Buys can be great if you're in and out quickly, but again, be careful.